Some people might find it odd why I always look at the stablecoin market cap, why I always look at this chart over here. Why do I find it so important that the stablecoin market cap is going up? Why do I use this as a tool to determine whether or not we are in a bull market or in a bear market? It's because it shows us what the potential players are that we play against when we actively trade. So we all know that trading involves a player versus player game, right? When you are buying low, then somebody else sold low. So somebody else thought that the price continues to go down. You thought the price goes up. That's why you buy low. So you've got a different opinion. When it then goes up, when then the price recovers and you're selling high, then you are selling because you anticipate that the price is likely not going to rise further, but somebody else thinks that the momentum will continue. And when it then goes down again, then of course you made a nice profit. But it is player versus player, and the person that makes the better calls, that's able to better tell what the fair value of an asset is, that can better determine where currently the momentum goes, where currently the attention goes. That's a person that makes the money. So it's player versus player. Now, the reason why I like to look so much at the stablecoin market cap is it shows us very clearly, with very little volatility, so with very little ups and downs, with very little wiggling, it shows us very clearly where currently the capital is flowing. If people currently deposit their fiat currency into a centralized exchange, then that centralized exchange is going to send that fiat to a third party, for example, Tether. Tether takes custody of that fiat, potentially invests this into bonds, etc., to make some return, and then creates the equivalent of the fiat deposit as tokens on chain, so as USDT in that case. So you can directly see simply from how many tokens, how many USDT is currently floating around, whether or not currently fiat is flowing in the system or out of the system. But then what does this have to do with player versus player games? When there's currently money flowing into the system, that means that potentially new players are entering. So people are entering the space that potentially don't have that much experience yet. It's an expanding market. So when you've been around for a while, you already know how to analyze blockchain data. When you've got your system set up, when you know how to minimize your risk, how to maximize your profit, etc., you have learned something, right? You've got some skill. And that skill edge, of course, with some luck, will translate into alpha long-term, will translate into outperformance. So you will be able to make better calls around the bottoms and the tops than the person that just enters, right? So you've got comparatively weaker competition as the market expands. Now, when the market does not expand anymore, then what happens is that the current players that made some money, and they will stick around because they think that we'll continue to make money, but the people that lost money due to that expansion, where you made your initial gains from, they are not around anymore. So what that means is that when no new people enter the space, suddenly it's not anymore experienced player, so you, versus inexperienced player, and you make money from that. Suddenly it's experienced player versus experienced player. And that is way, way tougher to beat. I've learned this with online poker. So before my whole crypto career, roughly 10 years ago, more than 10 years ago actually, I used to play online poker professionally. So I paid my study fees with this, both the bachelor and the masters. I paid my whole study life with that. I played online poker professionally, more than 2 million hands I played. So that was cash game on PokerStars. I did a Supernova Elite. So I made a ton of revenue for the online casinos, and I also made quite some money with this. What I learned is that while there was still the poker boom going on, and there was still a lot of marketing for poker, etc., that a lot of new people entered the space, so that were the inexperienced players, that was the fish, and it was relatively easy to make money from those inexperienced players if you knew the basics of poker. If you had your basic poker tracking software on, if you knew how to play certain hands, right, how to be relatively tight pre-flop, so not play every hand, and then how to be relatively aggressive post-flop if you've got value. So you simply just have to follow very basic rules in order to make money when the market is expanding. However, as the market stopped expanding, as the market even shrunk, and there were less and less players, the games got tougher and tougher. And suddenly you have to play 3, 4, 5 times as long to gain the same amount of money. That effect is even stronger because your net gains, they're net gains after certain costs, right? So for online poker, that's after the rake, the fees that the online poker casino takes. So when you make money, when you win a pot in online poker, a certain percentage of that pot goes to the online casino. So your minimum edge, right, your minimum advantage versus other players needs to meet a certain threshold. So you can't just win, say, in 50.1% of the time, because there's like 3-4% of the entire pot that goes to the casino. So you need to have an edge of at least, say, 55 to 45% over the long term over all of those games. So you need a minimum advantage over others. And when that advantage shrinks because there's less casual players in the market, then your profit shrinks in a higher proportion because there's always this minimum that the online casino takes. The main problem with crypto YouTube is conflict of interest. Too many YouTubers shill garbage, promote garbage, and fill up their pockets in the background. Not this channel. Instead, there's simply the offer where I share my skills, my perspectives to you, and where I also share direct access to me, where you can ask me any questions. Feel free to check it out. The premium membership link is down below. In crypto, it's exactly the same, right? When you're trading crypto, you've got the gas fees, you've got the slippage, you've got the front run bots, you've got all kinds of other players that take money out of the market, right? You've got the early investors of all kinds of altcoins that might be selling off, that might be diluting and push down the prices. So you've got some kind of minimum edge against other players that you need to attain in order to gain long term. There's simply too many people that already take out their safe gains, so to speak. If you don't have a MEV bot, if you're not part of the early founders of a project, if you don't just make money by providing liquidity to a liquidity pool, but when you're actually actively trading, then you have to beat the beginner, or you have to beat the competition after all of those fees, after all of those other people got paid. Thus, when it's player versus player, and the other players are rather experienced, because the market as a whole is not expanding anymore, and we can see this in the fiat deposits, right? When we see the stablecoin market cap not growing anymore, it becomes very, very tough. So as the market expands, maybe 20-25% of players can make money and the others lose. But when the market does not expand, maybe only 5% can make money, right? I'm not just pulling those numbers out of nowhere, but I do believe that the proportion of winners shrinks massively during markets that aren't expanding. And so yes, looking at the stablecoin market caps is useful simply just to have an idea of where prices in general might be going, but especially useful when looking at altcoin trading, because altcoin trading is obviously a negative sum game after all of those fees, after the gas fees, after the front run bots, after slippage, after payment of the decentralized or the centralized exchanges, right? They also take some kind of fee. It's negative sum after moving those funds back and forth. And in that way, crypto is the exact same thing as online poker. I personally left online poker once it didn't expand anymore, because also the strategy that I was using at the time was simply based on a lot of turnover with relatively little edge. So there's different kinds of strategies, right? You can also deploy different kinds of strategies in crypto. In crypto, you can actively trade. So that's when you need quite a bit of an edge because you generate a lot of fees. Or you could invest, so to speak, right? You could buy, say, Bitcoin and hold it through the cycles, and then you don't generate as many fees, and then you don't need as much of a market edge. You can simply just ride the waves. But as you are trading more and more actively, you do need more of an edge. And so that's something I think most people aren't aware of. If you're trading altcoins very actively, then you can potentially win in a bull market, but in a bear market, there's way fewer winners. Even if you decide to do delta neutral hedging, etc., it's still player versus player, and the other players are potentially professionals, are potentially people that are also as deep in crypto as you are. So taking money from those people is way, way harder than taking money from the beginners. And so here's what I do during those kind of market phases. I do believe we will see expanding market phases again. I don't think that crypto will suddenly go away. But what I personally do is, when I don't see there's too much easy alpha, I simply try to learn more. So I focus all of my attention on trying to get a lot of skill edge, that once the market expands again, I can take even more advantage of all the new joiners. So I'm trying to improve the tools that I use for on-chain analytics. So I'm trying to track people that tend to make a lot of profit in the past. I try to track wallets of other influencers, right? That I can then find out what did they buy and then what might they in the end promote to all the new joiners. I'm trying to do those kinds of things. I'm trying to prepare myself to then have as large of a skill advantage over all of the other people. And I don't try to distract myself making too much money in the moment. I think it's better, instead of just grinding it out and trying to keep the same kind of income, it's better to simply build up skill. Right? Because that's in the end how we all invest our time. We either grind, right? We either try to generate money for every hour spent, we try to research projects, etc. Or alternatively, we try to improve our skill. And over time, of course, the more skill advantage we have, the more alpha we should be generating. And we could try to still make that little bit of money versus all the other professionals. But I think it's better to focus most time, not necessarily on active trading, but really on skill development. It's trying to build a library of knowledge. It's trying to learn new tools that most people aren't using, trying to find these little pieces of information, trying to find the other people that are already beating the market. It's trying to be properly and well prepared that once a lot of money gets into this all again, we can take as much of this as possible. And so that's, I think, what most people don't get. Most people simply don't do anything with crypto when we are in a bear market. But that's a mistake, right? Because other people might develop their skills further, and then when the next bull run happens, those people that actually worked on their skills, they make most of the money. The people that simply just passed it by, that simply just looked at other things, that maybe even distracted themselves with something that doesn't make any money, they might make some money during the bull market, but definitely not as much as they could have had they learned enough during that bear market. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time, and see you also in the Telegram channel. There's also a link down below here. Feel free to join us in Telegram. Looking forward to chatting with you. Cheers.